ago, the U.S. government came out and announced the monthly deficit was $380 billion when the anticipated was 290. So it was $90 billion larger than what they thought. I mean, now you can't take the 380 and multiply it times 12 because it's lumpy. But if you did, that's $4.8 trillion deficit. I mean,
renowned sound money advocate and portfolio manager Lawrence Lepard is predicting a massive increase in Bitcoin prices within the next 2 to 3 years. According to Lepard, who has been warning about the dangers of the government's reckless spending and the constant devaluation of fiat currencies like the US dollar, we are on the very last leg of the fiat monetary system. So the system is crumbling from the inside out, almost completely crippled by reckless spending and borrowing. So in stark contrast to the easily inflated fiat system are hard assets like Bitcoin. The leading cryptocurrency not only has a fixed supply, but the periodic halving event also helps control supply and prevent inflation and devaluation. In addition, Bitcoin has been one of the best performing assets against the balance sheets of central banks, especially the Federal Reserve. The more these banks inflate and devalue their respective fiat currencies, the better Bitcoin performs measured against these currencies and balance sheets. However, the main clincher is that Lepard believes central banks are about to unleash a torrent of money, printing on the global economy much more than we witnessed during previous crises, including the great financial crisis and the pandemic. This means higher Bitcoin prices, and Lepard is predicting at least $350,000 Bitcoin when the printing begins and over $1 million per coin as the situation worsens. We will now bring you clips from Lepard's recent interview with Stephan Livre. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. In the next video, I will talk about how I make money with passive income in crypto. Thank you and enjoy the video.
We're clearly running a $2 trillion deficit, but I would say arguably it's even a bit larger than that. And there's always been a little bit of a disconnect between what they report as the deficit and the amount that the debt grows. They managed to sneak some stuff around and not run it through the P&L, the income statement, because the debt, if we run a $2 trillion deficit, the debt might grow $2.6 trillion. And I don't know where the other 0.6 came from, but the government's pretty good at kind of fiddling with the numbers. But yes, the point is that at a broad level, there is no discussion or thought in Washington, D.C. about how to address this problem. I thought it was extremely telling that, in the Kamala Trump debate, there was zero conversation about, the deficits and the debt and how it was going to be dealt with. And very similar last night in the Walz-Vance debate. So there was little talk about inflation. There was no talk about the U.S. fiscal situation, which is really, kind of mirroring the situation that we've seen before in developing countries. I mean, this is not, there's no mystery as to how this plays out and what happens. I mean, we've seen this pattern over hundreds of years in a lot of countries. We've just never seen it in the largest country with the world's reserve currency. And, Venezuela did this, and Zimbabwe did this, and, Brazil did this, and Argentina did it, and, a couple times. And, Poland has done it. There are a number of countries that have had, very serious, fiscal problems, and then they've led to trying to solve those problems by printing money. But they were smaller countries. They weren't the world's reserve currency. And of course, now we've got the world's reserve currency, following that same playbook. And as you and I both know and agree, it's not going to end well. There are a lot of possible endings, but, inflation is almost baked into any one of them, absent, letting just an enormous structure of debt collapse and having a situation that, looks similar to 1929, where there's all kinds of default everywhere. So, and I think that at the end of the day, the central bankers won't allow that. They have a printing press and they intend to use it, and they will use it. They've shown us that multiple times. And I think they view inflation as a lesser of two evils, with the other evil being, deflationary collapse. So,
yeah. And I'm curious your view on this idea.
Go ahead,
one thing that comes to my mind is it seems to be one of those untouchable areas nowadays. Now,
right.
I'm Australian, but it's, as an example, I heard that basically neither side mentioned all the COVID tyranny. And maybe the reason for that is both sides, both major parties, were complicit. And maybe in the same sense with government debt, it's that both sides are complicit on this, other than a few libertarians, the Thomas Masseys and Rand Pauls and Ron Pauls of the world. And maybe if you went back like 10 years or something, there was Paul Ryan or someone like that, although
Sure.
not a libertarian, but that was probably the last you seriously heard of actually trying to cut the size of the
I
state,
think that's
isn't
right.
it?
I mean, there were maybe a few other names of the Republican Party who were trying to cut back on the spending, but it's a very, very short list. And yes, I mean, it appears to be that the choice, the Washington, D.C. choice has been, let's pretend this problem doesn't exist. That's just, that's how they've decided to deal with it. And, that's fine. And, on a day-to-day basis, the country keeps running, right? I mean, GDP just grew reasonably well, and, inflation has come down, not as much as they say, but it has come down. And unemployment, while it's creeping up, it hasn't exploded upward. I mean, the economy is kind of bumping along. The U.S. stock market's close to record highs. So, to an outside observer, you would say, well, there's nothing terribly broken right now, except for the fact we're running these huge deficits. And, so I think that DC won't react until they're quote unquote forced to react, and it's very similar. I remember 2006, 7, and 8. I mean, you had to be blind not to kind of realize there was a housing bubble taking place. And yet, Bernanke and others were saying, no, there's no problem here. Houses have never turned down on a nationwide basis, et cetera, which was wrong. It was a lie, because in 1929, from 1929 to 1931, houses fell 67% in value. So when you have a real significant economic downturn, a deflationary impulse, housing can go down a lot, but they didn't admit that at the time. And I think that's the same thing here. And so my view is, at some point, we will be back, quote unquote, in crisis conditions. And, then that will justify the next big print that will take the government, balance sheet from, the 7 trillion that they managed to reduce it to down from, say, 9. The next one will take us up to 20 or more. And that's because if they stop printing the money, I mean, all the debt has to be serviced, and the GDP growth isn't growing. They need GDP growth to be faster than the interest cost, than the underlying. So they need negative real interest rates, is what I'm describing. And if they don't have them, there's going to be another point in time at which the lines cross and things break. And so it's a little hard for all of us to know that. And I know for Bitcoin, it's a little frustrating, because you've kind of been trapped in this, downward trending wedge, between kind of 65 and 55. But, gold smells it, which I think is pretty interesting. I mean, as you're aware, and gold is hitting record highs. And what I think that is, and this, by the way, this is what happened in the 2018, 19, 20 period too. Gold broke out from 1365. Bitcoin just sat there. And then ultimately Bitcoin went racing by gold, which is what will happen this time too. Bitcoin will outperform gold massively in this next run, but gold moved first. And the reason is that more people know about gold, it's more broadly held. And I think that people, I think the gold is very good at, quote unquote, smelling future monetary debasement. And if you look at the conditions we're in right now, it's very clear to anyone with a calculator that, we are going to face serious future monetary debasement, whether it be in a month or in 6 months or a year. It's coming. So,
yeah, I think that's a great way to explain it. I think that's true, that it's, we've seen gold move first, but then Bitcoin is the fastest horse, and it sort of moves afterwards, but it pumps even harder than gold does.
Yeah.
So I think that's what we've historically seen. So it's probably a fair guess to say that could happen again.
There's no doubt in my mind that's what's going to happen. I mean, I think when things break, gold's going to go through 3,000 and Bitcoin's going to go to 150, and easily in my view. Because they both represent sound money. I mean, one is old and analog and tired and widely distributed. The other is new and growing and therefore has a lot more upside because of, the low level of adoption. I mean, I'm always, Crisis Bitcoin on Twitter always has that. I'm always amazed at the chart where still the entire Bitcoin market is only $1 trillion in the context of $900 trillion of financial assets in the world. I mean, we're talking just a real sliver of the amount of money in the world is invested in the soundest asset in the world. And so, as time goes by, more and more people are going to come to realize that this is the soundest asset, and they're going to adopt it. And it's, that disparity is going to close, right? I mean, Bitcoin's market cap is going to be much higher than it is right now.
So on the government debt, we can get to gold a bit later as well,
Yeah.
but on the government debt, there's a lot of different views there, right? Some people are kind of like, oh, this is the debt spiral. It's going to it's going to get away from us. It's going to cause this big recession. And then maybe there's kind of the middle view, which is maybe something like a soft landing that, the government is just going to, US government is just going to keep printing. Maybe GDP number will go up, but there'll still be, all these social issues, and it'll be kind of the haves and the have-nots, right? It'll be some people call it the K-shaped, recovery. I guess the question I'm thinking is, how much longer can they just, keep kicking the can? I think one caution I would have is that we want to be cautious not to sort of say, oh, it's all happening now, because they could keep this thing going for a lot longer than any of us really realizes.
I think that's true, but the game is afoot and things are accelerating. The gap between '08 and 2020 or 2019 was smaller than the one before that, and the printing size of each round is larger, and the issues are getting to be more obvious, and more people are becoming aware of them. And so, but yes, you're right, and we don't know how it plays out, and it's all you can do is say probabilities. I mean, we could have a kind of a quasi melt-up boom where the stock market making new highs, unemployment being relatively low, businesses being relatively healthy, the debt level continuing to grow at all levels. Everyone just keeps on leveraging themselves up. And, I think that's a possible outcome. But I think if we do have that outcome, it's going to be inflationary. I mean, I think one thing I think is true is we saw the first, we had peak deflation in March of 2020, right? That was kind of, when the 10-year sold at 60 basis points briefly, that was a really deflationary impulse. And since then, we've gone the other direction, and at various points in time and at various speeds, right? When they printed 40% of the money supply, well, inflation took off, and now they put the brakes on that, and so inflation has calmed down. But I think it's very clear to me that inflation is going to heat up again, and you're already starting to see it when China, as we're doing this right now. China just came out with a big stimulus package in the last 2 weeks, where they decided they're going to support their banks, inject money into the economy. I mean, kind of all the above on the money printing scale. And the day that happened, I mean, I think commodities, tin, rubber, various other commodities that are traded in Asia, they were all limit up on the day. And so yeah, I mean, I don't think there's any doubt that the governments will try to keep the system functioning. And if the release valve is inflation, so be it. The economy's going, ticking along, but it's inflationary. I think there's a possibility though that they lose control of that inflation on the next one, and that's really the issue. The issue is, we're in a period here where we're shifting from everyone believing in the deflationary trend in the stock market, which we had for 40 years, and the correct choice was always to quote unquote buy the dip, because really, if you bought from 2008 onward, if you bought the dip in the S&P, you've been rewarded. I mean, it might have been painful when you did it, but you've been very, very well rewarded. And that's all because the overall deflationary trend was in place and interest rates were lower, so stocks were the best alternative. I think as we've turned the corner here on that issue, and you see it other places too, like you've got this potential dock workers strike, and labor all over the world is realizing that their purchasing power just got destroyed by 40%.
Check out the link below if you buy and spend coins to check Nexo Exchange, and I'll see you in the next one.